Amazon has become America's go-to destination for clothing. Pandemic-fueled e-commerce spending sent Amazon's clothing sales soaring back in 2020. It further solidified Amazon as the top apparel retailer in the US, a spot previously held by Walmart up until 2018. But it wasn't just a pandemic fad. The segment has continued to grow. Nearly 13% of all US clothing sales came from Amazon in 2024. Its apparel and footwear sales were more than double Walmart's, and more than 10 times the competitor's online clothing business. However, for apparel sellers, Amazon is an expensive platform. Returns run rampant, and fees are high. That said, its global reach makes it impossible for big brands and small businesses to ignore.
They're really becoming reliant on Amazon for the volume, and it's hard to kind of wean themselves off that once they get onto it.
So how has Amazon scaled its clothing business, and why has it become such a fashion destination? Amazon is one of the biggest companies in the world. If you invested $1,000 in its stock 20 years ago, you'd now have about $100,000. Amazon has a $2.5 trillion market cap and does hundreds of billions of dollars in annual sales. But it was just over a decade ago when Amazon really started to make a push into the apparel space.
For Amazon, it's really been able to leverage its scale and dominance in e-commerce to win in apparel. So everybody knows they got their start as a bookseller, adding new categories and verticals like toys, electronics, and apparel.
In 2012, Amazon Fashion ran its first advertisement campaign as the company began courting brands like Vivienne Westwood and Kate Spade. It also began using customer data to personalize search recommendations and made a concerted effort to hire models and stylists to better illustrate its offerings. In 2014, Amazon's apparel and footwear segment was estimated to have done about $7 billion in sales. Within a few years, Amazon began ramping up its own private labels, offering dozens of in-house brands and tens of thousands of products. By 2022, there were over 100 confirmed private label brands. Some of those initiatives have since been axed to cut costs.
I've heard this from some folks who are close to the company that, private label just wasn't profitable for them necessarily. There are some brands that have done well, like Amazon Essentials and Amazon Basics, which really lean more into like the types of items that you would frequently order and are less experimental.
Amazon would rather sell the same one item a million times than a million unique items. And that's one of the big challenges with apparel. Apparel has so many changes, the different looks and seasons. And that can be a challenge because just as you're starting to ramp up on your advertising and people are really knowing that product's there, you're coming out of the season.
We have seen major players expanding their presence on the marketplace for years by rolling out storefronts on the Amazon website. And it continues to this day, with companies like Michael Kors and David's Bridal launching storefronts in 2025. Even Nike has returned after famously exiting the platform in 2019 over concerns of brand control and a push to grow direct-to-consumer sales.
Brands are trying to work with Amazon because they're worried about unauthorized sellers of their product are going to turn up there anyway. I think that could have been a lot of the Nike decision to kind of come back. Even if a brand pulls out, they can't control other sellers who are putting their product up there.
That was especially prevalent when the segment was in its early growth phase for brands like North Face, who wanted to clean up unauthorized distribution that was already happening on the site. At this time, Amazon Apparel was increasing at a 40% compounded annual growth rate. Recently, Amazon has been focusing efforts towards its luxury storefront, which first launched on the website back in 2020. In April 2025, it partnered with Saks Fifth Avenue to sell products by high-end brands like Dolce & Gabbana and Belma.
I have been approached by Amazon teams from apparel to get in front of super high-end luxury brands. There is a very concerted effort internally to reach out one by one to these brands and get their founders, get their CEOs, get them on the platform and encourage them to become sellers.
Amazon declined an interview with CNBC for this story, but said in a comment that it is proud to partner with a wide range of selling partners and brands, from small businesses to global names, and it would continue to invest in tools, services, and delivery innovations that help brands grow. There are two main ways that sellers can be a part of the Amazon marketplace. The first is Amazon purchases inventory in bulk from a company and then controls the pricing and listing of that product on its own. That approach used to account for a bigger portion of the marketplace, but is now by invite only. According to an analysis by Hawk Media, which consults for Amazon sellers, typically only brands doing at least $10 million in sales per year on the platform are considered for this type of relationship. Though Amazon said that figure isn't accurate in an email to CNBC.
There's not a lot of brands that are doing 10 million a year on Amazon. Amazon as the entity does not want their cash tied into the inventory. They want it deployed in operations or in other places, and they want the brands to take on that onus and responsibility of having their capital locked in inventory.
That leads us to the second way that most third parties are using the platform. Pay Amazon a fee to sell products on its site. For the clothing segment, that fee is typically between 5 and 17%, depending on the cost of the item. But that's only the beginning. According to a 2023 FTC lawsuit, sellers pay up to 50% of their revenues to the e-commerce giant when all is said and done. In an answer to an amended filing of the lawsuit, the company said, Amazon lacks the knowledge or information sufficient to form a belief as to the truth of those statements, and on that basis denies them. But even if just some sellers have reported paying those fees, why be on Amazon? The bottom line is Amazon provides sellers access to an enormous number of consumers that they wouldn't otherwise. With that comes high order volumes that must be processed. Amazon offers Fulfillment by Amazon, an optional service for where additional fees, Amazon handles the processing, shipping, and returns for them. That can come with a whole host of other costs like monthly subscription fees, long-term storage fees, removal order fees, return processing fees, unplanned service fees, and the list goes on. While those costs can add up, the services Amazon is offering is more than most small businesses could leverage on their own.
If you're, a seller that's just launching their business online, it's sort of like this jump start to starting a business. And when you compare it to other platforms like Etsy, for example, where sellers largely have their own warehouses and rely on third-party logistics companies and carriers like USPS, it's a huge advantage. And that's why we've seen companies like Walmart copy Amazon's playbook and launch their own fulfillment services as well.
According to a Wall Street Journal investigation, Amazon has also leveraged the third-party seller data it has to make dupes, or replicas of successful items with its own brands.
Well, I spoke with a company called Peak Design. They make these camera bags that are very popular in the photography world, and Amazon made almost exact copy, a dupe, of one of their most popular camera bags. And the company put them side by side, did a funny video showing the differences, and Amazon ended up having to take that one down. But in the majority of cases, sellers are small businesses. They don't know to get patents. Sometimes they learn through this process that they need to, and they might fall victim to even going under because Amazon has undercut them on prices with a very similar product.
Amazon told CNBC, "We do not use data about individual sellers that isn't public to determine which private brand products to launch, and we have a policy to protect seller data that goes further than any other retailer we know of." That FTC lawsuit mentioned earlier also accused Amazon of anti-competitive practices surrounding pricing. It alleges that sellers are punished if Amazon finds that they are offering a lower price outside of its marketplace. CNBC looked through more than a dozen products from major brands which were cheaper on Amazon than the brand's own website. So, how does Amazon monitor the prices of so many products across the e-commerce world? Well, all the goods sold on the marketplace have a UPC, or Universal Product Code. That's an identification code that is used across retailers, so companies like Amazon and Walmart, for example, can see what price the other is selling things for.
So the first thing that we tell our clients is make sure you have a set of UPCs that are specific for Amazon, and that you don't sell to anybody else. So that's one way to make sure that you're not having these price-to-price matches.
If Amazon detects that a seller may be offering their price for less elsewhere, these sellers will get an alert to their account that essentially says, hey, we've detected this, you need to fix your pricing on our website. And if they don't comply with that alert, sellers have told me that what this leads to is essentially Amazon penalizing them in some way, often by threatening to disqualify them from the buy box.
The buy box is the seller that shoppers see when pressing add to cart. This is critical as the buy box accounts for 98% of all purchases, according to the FTC lawsuit against Amazon. An Amazon spokesperson said, other retailers also use similar tools and practices to highlight competitive offers and provide customers value in their stores. Just like any store owner who wouldn't want to promote a bad deal to their customers, we don't highlight or promote offers that are not competitively priced. While the company could be facing legal repercussions for these allegedly anti-competitive practices, being able to command the lowest prices on the market has undoubtedly aided its success.
What we're seeing now is that we're at a bit of an inflection point, and the consumer's kind of tired of it. They're tired of doing the work. They don't want to be the ones price checking. They're absolutely frustrated by inconsistencies in pricing or thinking they might not be getting the right price because they haven't checked enough channels. And now all they're asking for is just make it easy for me. And Amazon can do that better than anyone.
The company said in a statement to CNBC, if the FTC is successful in this lawsuit, the result would be anti-competitive and anti-consumer because we'd have to stop many of the things we do to offer and highlight low prices. A perverse result that would be directly opposed to the goals of antitrust law. One of the biggest appeals to shopping on Amazon is easy returns, especially for Prime products. That, coupled with efforts to match or offer lower prices than elsewhere, has allowed it to gain extensive market share.
So sellers on Amazon have told me that return rates on Amazon are much higher than on other platforms, and that has led them to have to increase prices to make up for that lost margin. But they've also had to increase those prices because they want to make up for all of the fees they have to pay to Amazon through Fulfilled by Amazon for the reverse logistics of Amazon handling the return for them.
It doesn't help that the clothing category is disproportionately threatened by high returns.
Somebody can look at an item online, but they're not totally sure it's going to work, or more commonly, they don't know what size to get. So, what's the harm, right? From a consumer's perspective, they might just order 4 different sizes or 4 different colors and try them all on at home and then send 3 of them back. That's obviously a very costly reverse logistics journey then for Amazon and frankly for the seller to stomach. So they're losing a ton of money on 3 of the 4 items that they sold, often so much so that they're actually not making any money, from that sale to begin with. People don't realize, and what I've uncovered in my reporting is that the vast majority of the time, both on Amazon and elsewhere, returns in the apparel space don't go back into the seller ecosystem. They actually get sent to landfills. They get burned. They create billions of pounds of landfill waste every year.
In 2022, Amazon confirmed with CNBC that it uses energy recovery as a last resort. That's when products are incinerated and the heat is used to produce energy. Amazon declined to comment on the record for this story. Experts say the problem of returns can also be exacerbated within certain segments, like formal wear or Halloween costumes, where people will actually return them after they've already been worn.
The number one detriment of growing these massive e-commerce online fashion businesses is that returns have been higher than any other sector, any other industry. And I think what they're saying is that the volume they're getting, especially in light of the challenge of acquiring new customers, is worth the trade-offs of these kind of little hits away to the margin.
At the start of 2025, Amazon ended a program called Try Before You Buy. The service officially rolled out in 2018 and allowed shoppers to try select apparel, shoes, and accessories before making a purchase. But more importantly, Amazon would not charge the seller fulfillment and processing fees for products that were returned. It was essentially a sanctioned way to combat this issue of returns by reducing costs for the seller.
If Amazon can't even stomach the Try Before You Buy program and the losses that it was creating for them, you can imagine how difficult returns are in the apparel space for small businesses.
One of the things that Amazon is kind of known for, at least internally, is, rapidly experimenting, trying things, even if they fail. And the idea there is even if the project doesn't work out, maybe there's some type of learning that they can take away from that.
The company was trying out its own vertical video offering called Amazon Inspire, which didn't work out. But one thing the company did learn is that digital advertising pays off. One report placed it as the #1 brand on TikTok by earned media value. That means the company generated about $1 billion worth of advertising with unpaid organic exposure on TikTok. And while those figures are not apparel specific, the social media app lends itself well to the segment.
Safe to say I did some major damage at Amazon, and it's so soft, plus comes in so many different colors.
The sentiment of brands selling on Amazon has changed significantly over the years. 2012, 13, 14, 15, this was greenfield for everybody. It literally felt like you opened up a gate and then the brand was like, oh, I can run out and do whatever I want, and like was super happy. In like 2023, 2024, Amazon feels like a doldrum, like a requirement, something they have to do. They don't want to do it, but they have to do it because there's so many customers there. And if they're not there, you know, they won't be able to go to other retailers and show what they're doing. They won't be able to go to investors and show what's happening. Now, 2025, you start throwing in some of the short form video where the understanding is that TikTok Shop is going to be the glittery kind of like attractive thing that's going to draw attention. And then Amazon is the net that catches all your customers.
Wells Fargo estimates that Amazon's apparel and footwear segment will grow another 7.5% for 2025, topping the $70 billion mark.
I think we've come to a different point where the debate brands have had is really a non-issue anymore. And now it's not about whether you should be on Amazon or not, but how you're going to work with them.